Hey there, and welcome to this explainer. Go ahead and grab a seat, because today we're going to sit down one-on-one, just like a mentor and mentee, and completely shatter pretty much everything you've ever been taught about money. Look, if you've ever felt like you're just running on a treadmill, working incredibly hard, but never actually getting ahead, you are absolutely in the right place. Today, we're cutting through the noise. We're going to look at the undeniable data and the core psychological principles that literally separate the ultra-wealthy from everyone else. Okay, let's kick things off with a dead simple question that completely draws a line in the sand between the wealthy and the rest of the pack. I want you to answer this honestly for yourself right now. Are you working for money, or is money working for you? You see, most of us grow up believing that the absolute only way to build wealth is to trade our finite time for a salary. But the truly wealthy, they operate on a totally reverse paradigm. They don't work for money. Instead, they build systems and buy assets so that their money works tirelessly for them, 24/7, even while they sleep.
All right, Section 1, the fear and greed trap. To really figure out why you might feel stuck in the rat race, we have to first unpack the primal, psychological drivers that are holding you back. You've probably been operating on a totally flawed equation, trading your time for dollars, all driven by a deeply ingrained poor mindset. Think about it. A poor mindset looks at a hurdle and just says, I cannot afford it. Bam, brain shuts off. But a rich mindset, it asks, how can I afford it? Which instantly forces your brain to hunt for creative financial solutions. One tells you to study hard so you can go work for a good company. The other tells you to study hard so you can eventually buy that good company. The difference here isn't just semantics, guys. It's the literal foundation of your entire financial future.
So how do we spot this invisible trap in our own day-to-day lives? Well, it all starts with two incredibly powerful emotions, fear and greed. First, the fear of not being able to pay your bills or losing your job forces you right onto the hamster wheel. You start desperately seeking the illusion of job security. But then, say you get a raise. Boom, greed steps in. Now you want the nicer car, the designer clothes, the upgraded lifestyle. Before you know it, your expenses are rising right alongside your income, and you're trapped. The only way to break this cycle is to actively override those emotions. When you feel that panic or that sudden urge to splurge, you have to stop and ask yourself, hold on, is there a long-term solution I'm missing here?
Moving right along to Section 2, assets versus liabilities.
Now, what's really wild about this next concept is that you'll find highly successful, brilliant professionals who are actually completely financially illiterate when it comes to this one fundamental rule. It is strictly about defining where your cash is flowing. It really is this simple. An asset puts money in your pocket, whether you're working or on a beach. A liability takes money out of your pocket. That's it. The wealthy spend their entire lives acquiring true assets, while the middle class spends their lives buying liabilities that they mistakenly believe are assets.
Okay, as your mentor, I know this next part might sting a little to hear, but let's talk about the ultimate classic example, your beloved house. Most folks genuinely believe their primary residence is their greatest asset. But let's be real. If you have a 30-year mortgage, property taxes, constant maintenance costs, and insurance, that house is draining cash from your pocket every single month. From a strict accounting standpoint, it is a liability. Believing it's an asset is a trap that delays true financial education. True assets are things that generate net positive income. We're talking dividend-paying stocks, bonds, business equity, or even digital tokens in a blockchain project.
And if you want proof, the market data brilliantly backs this up. Just look at how wealth is actually composed. For the middle class, a staggering 80% of their net worth is tied up in their principal residence and pensions. They've got a measly 4% in liquid assets, like stocks. Now flip over to the top 1%, the ultra-wealthy. Their primary residence makes up less than 8% of their total wealth. Instead, over 40% of their money is in stocks and mutual funds, and nearly 50% is built on business equity and investment real estate. They own the systems. They own the assets.
Next up, Section 3, solving million-dollar problems.
If you really want to break into that top tier and stop trading hours for dollars, you have to drastically increase your perceived value in the marketplace. Working harder at your current job isn't going to cut it. You have to follow a new equation to build a scalable system. Step 1, find a problem that people absolutely hate or find incredibly inconvenient. Step 2, create a laser-focused solution to that specific problem. And Step 3, this is the magic one, scale it infinitely. Look, if you're a yoga teacher charging $100 an hour, you haven't built a business. You've just created a job for yourself. But if you build an online program, or a software platform, or a franchise that runs 24/7 without you even being there, now you've unlocked true scale.
I love this quote. Stop chasing money. Chase solutions. It's brilliant. As we've seen from native digital disruptors and self-made billionaires, if you can solve a billion-dollar problem, the market is going to gladly reward you with billions. Think about how legacy payment companies are being challenged by modern blockchain networks using digital tokens. These new techs are solving massive global inefficiencies without needing a central authority, and all that value flows straight back to the token holders. The market always rewards massive, scalable solutions.
All right, Section 4, the power of compounding.
So, once you've built those scalable solutions and started stacking up revenue-generating assets, you need to master one very important skill: extreme patience. When you track the historical growth of a single invested dollar over a multi-decade span, you see something amazing. Safe bets like treasury bills, they barely inch up. But when you maintain a long-term outlook in the broader market, a tiny principal investment turns into this massive, unstoppable snowball. That is the magic of compounding, where the money you earn starts earning its own money.
And get this, the difference is staggering. An investor who simply took their dividends and reinvested them into the S&P 500 over a 47-year period accumulated 4 times more wealth than someone who didn't. 4 times. It's wild. That alone proves that consistency and discipline are absolutely your greatest allies. Building wealth isn't about perfectly timing the market, it's about time in the market, just stepping back and letting your assets quietly multiply.
Finally, Section 5, overcoming your psychological barriers.
Listen, knowing the math is only half the battle. As your mentor, I have to be upfront with you. Even highly financially literate folks struggle to build true wealth because their own minds betray them. You've got to actively hunt down and destroy these 5 psychological barriers. First is the fear of losing money, playing it so safe that you actually guarantee you'll stagnate. Second is that deep-rooted cynicism. That little voice visualizing doomsday scenarios, so you end up dismissing every great opportunity. Third is laziness, which usually disguises itself as being too busy to manage your money. Fourth, bad habits, like paying everyone else's bills before you pay yourself by investing. And lastly, arrogance. Arrogance is just ego trying to mask ignorance. Stay humble, keep educating yourself, and you'll beat these enemies.
Because at the end of the day, true wealth isn't just some big number sitting on a screen or a shiny car parked in the driveway. It is the absolute freedom to reclaim your time. It's waking up and knowing you can do exactly what you want, when you want, without that cloud of financial stress hanging over you. So now that we've walked through the data, the mindset shifts, and the exact strategies the wealthy use to scale and compound, I'm going to leave you to answer this one vital question for yourself. Starting right now, today, what are you going to do with your one truly irreplaceable asset?